Hey, what's up, everybody? Welcome to Forex Trading Analysis. This is Monday, April 16th at 8:12 p.m. And today we're going to be looking at three different pairs. But before we get started, I want to do a quick risk disclaimer. So foreign exchange trading carries a high level of risk. Before you decide to trade foreign exchange, we encourage you to consider your investment objectives, your risk tolerance, and trading experience. It is possible to lose some or all of your initial investment, so don't invest money that you can't afford to lose. Seek advice from an independent financial or tax advisor, and all information provided is for educational purposes only and should not be construed as trading advice or counsel. So today from the euro, we had a pretty strong push up, like I predicted in the video yesterday. Hint. And that was because of largely oversold conditions. This was a pretty strong move to the upside from the lowest low, or the lowest close we had, around a 126 pip move. So really solid move from the euro. Upside, like I said, corrections can sometimes be a lot more profitable than the major trend and a lot easier to predict. So the euro right now is holding above the 100 and 200 hour moving average, and for now those will be points that I'll be watching. Not really placing a trade right now just because we are in overbought territory, or we were in overbought territory very recently. So from the hourly charts from the euro, right now my bias is to the downside just based on the fact that we've been in this pretty strong downtrend for the entirety of this month. So we are at a point right now where the euro is trying to figure out a direction, and volatility is going to be back and forth from this pair. I do like eventually a push to the downside. I think possibly we might see one more test of the 200 just based on the fact that we didn't really push up to it with very much strength back in January. I think this is March. And so I think that if we do see a pushback up to the 200, then a correction, a much larger trend actually to the downside, is definitely going to be a possibility. So from the euro, that's what I'm looking at right now. Pairs that I like a little bit better for immediate trading opportunities is the yen. Right now, if you look at the daily charts, we are almost at the 50% retracement, which in my opinion is the strongest retracement level. This will be a great barrier for support over the next couple days. If we do start to push below this, the 100 and the 61.8 are going to be next support targets. But right now, the risk to the upside for the yen is a lot stronger than the risk to the downside. So, also considering the fact that the RSI is about 38, which isn't quite oversold, but we are getting there. So, buyers are going to look to enter back into the market for the yen, and I am overall bearish on this pair just because it's been in such a long downtrend. But over the next couple weeks, possibly months, I could see the yen pushing possibly back up to the 30 or the 23.6, around 82.2, or possibly even back up to the high back in March, which is around 84.1. So those are levels I'll be looking at for the yen. Definitely some great trading opportunities out of this pair. You might think that it doesn't really move as much as some of the other pairs, but a lot of times you can get some really nice moves from the yen, and it is a pair that I like to trade. The last pair that I want to take a look at is the Swiss franc, which hourly charts show are just reaching out from the oversold territories and are beginning to push back up. We are seeing kind of weak price action towards the upside from the Swiss franc right now. RSI seems to be moving a little bit quicker, but right now we are in a moderate uptrend for the pair, and I think that will continue for the Swiss franc. We did have intervention back here back in September of 2011, and we haven't really pushed back down. A lot of times with interventions like that, if you look at the yen, you'll have pushes to the upside and then strong sell-offs after that, and we haven't really had a strong sell-off from the Swiss franc so far, which leads me to believe that the dollar is extremely strong, despite what a lot of people have you believe. I think that the treasuries are going to be bought in droves just based on the fact that the stock market has been pushing up for so long. S&P is, in my opinion, ready for a break to the downside. Overbought conditions are gonna start to really hurt some people. So, like I always say, that once you start to see a lot of advertisements for E-Trade and TD Ameritrade and Scottrade all over TV, that's kind of a signal where the retail accounts are going to start to buy. People are going to start opening a lot of new accounts, start buying a lot of shares, and the big banks are going to really start to short this market. So we might continue to push up for a little bit, but overall I think that the S&P is going to have a pretty strong sell-off within the next couple months, and that will lead to strength from the dollar, and specifically the Swiss franc is a pair that I'll definitely be looking to trade just based on the dollar strength. So a little bit of a longer term picture for the dollar and the Swiss. These are the three pairs I want to take a look at. Definitely continue to watch these videos, and if you want to follow us during the week at SynergyFX, we'll be posting updates. Thank you very much for watching, and good luck trading.